Okay guys, so in this video we are going to be covering what the creditors reconciliation statement, right? The creditors reconciliation statement. If you are struggling with the creditors reconciliation statement, this video is for you, right? So guys, in this video we're going to be going through some key concepts that you as a student, or I should say as a learner, you need to know or put in the back of your mind always when you're doing the creditors reconciliation statement, right? Now, if you already know this process, just skip the video, then watch the other important parts. But let me give you guys an idea of what's going on with the creditors reconciliation statement, right? So the creditors reconciliation statement is a process whereby an entity, meaning our business, is buying goods and services from another entity on credit. Meaning our business, let's say my accounting knowledge, is buying goods and services from a different supplier, from any supplier, right, on credit, right? Meaning when I go to that business and buy, let's say I'm buying a laptop from any different supplier, let's say Tembega supply, like here, right? I'm buying a laptop from Tembega supply. Maybe the laptop cost me what, 5,000. I bought it on credit, by the way. So this is the books of my accounting knowledge, let me just say MA, and then this is the books of what, Tembega supply, right? When I buy this book on credit, I'm gonna be issued an invoice, right? Me, it shows that I bought on credit, and it increases the what, the debt or the credit or whatsoever. I'm gonna start by saying, okay, I owe them 5,000. When I get back to Res or anywhere, I'm gonna just write 5,000 here because I owe them, and they also have to write 5,000 to show that this customer owes us 5,000. Now I come back again. What do? I buy an X pen for how much? 500. Right? Now this X pen I bought it on what? On credit. Now I write 500 here to show that I am increasing this debt. Meaning now I owe them 5,500. But instead of them recording 500, they just recorded what? 200. They said that I owe them how much? 200. Such things, right? Now when I totalize and come to them and saying that, okay guys, I owe you guys 5,500, and they're telling me that I owe them 5,200. Now we'll have to see what's wrong, what happened in order for our balances not to be the same. What happened? What happened is that I came back and bought something on credit by how much? 500. I recorded, but instead of them writing as at 500, they did what? They wrote it as 200. Now how are we gonna correct these balances? Now we're gonna say that, okay guys, let me just go back and see all the transactions that incurred and prepare to see if who made the mistake. Now we're gonna start by saying, okay, I'm claiming that I owe them 5,500 and they're saying that I owe them 5,200. Now I bought the PC by 5,000. Yes, I did record the 5,000 and they did record the 5,000. I came back and said I bought the X pen by 500. I recorded the 500, but they did what? They recorded 200. So they made a mistake. They should have recorded how much? 500. So on the 500 that they should have recorded, they only recorded how much? 200. So what is left? 300. So they must record this 300 in order for these balances to be the same. So here I'm having 5,500, no mistake. This side 5,200 plus 300, I'm having 5,500. So this is what is going on here, guys. So please have that at the back of your mind, right? Now let's come here and move. Another quick thing that you need to do in the exam is this: first identify who is the business and who is the supply, right? And another thing that you need to know is that here we're talking about the books of Ekasi traders and Tembega suppliers. If I buy from a different supplier, that information that I bought or whatsoever goods that I bought from that different supplier, I don't have to include them in the books of Tembega suppliers. Are you fine, guys? So please don't ever make that mistake, right? They will give you such scenarios there, but you have to derecognize the amount. You have to derecognize it, right? Now let's come here. First identify this, right? If you don't know on which column does this one increase or decrease, here's a trick method that you need to know, right? Remember, guys, an invoice increases what? The credit that you have, right? The goods and services that you bought on credit. Let's say you owe them 81,000. The invoice shows us that it increases this balance. Now this shows that, okay, since invoice increases the debt, it means that it increases on the credit side. Now if you pay attention, my EFTs are on the what, are on the debit side. It means that okay, on this side it decreases. How? Because EFT means that I'm paying what I owe them, right? So meaning everything that reduces the money that I owe them must be sorry guys, let me fix this quickly. Okay, anything that I owe them must be on the debit side. No, anything that I paid must be recorded on the debit side. If you see something that is supposed to be on the credit side but it's on the debit side, in order for you to take it to the correct column, what are you gonna do? You're gonna take that amount and double it. Let's say this amount is supposed to be this side, but you recorded it this side. You're gonna say 10,300 multiplied by 2 and put it on the correct side, with the correct side, which is positive, right? Such things. Okay, fine guys. Now let's come to this one. Since these ones, it decreases on this side and this one increases this side, it means that it's gonna come and cross. It means we are increasing this side and this one are decreasing this side. How? Remember, you see invoices on the debit side and then payments are on the credit side. Another thing that you need to know. Number one, invoice increases the money that you owe them. An EFT or a receipt, it does what? It reduces because you paid, right? A debit note, it reduces the money that you owe them. And there's something called a general voucher. What's going on with the general voucher? A general voucher, it simply means that, let's say, in theory, like mainly on how people understand this thing, it means that we as Ekasi traders, we're always buying goods from Temberg, buying from Temberg, such things. But there's a case whereby Temberg can also buy something from us. Now the money that the value of the things that Temberg bought from us, we are just gonna say no, don't pay us now. What are we gonna do? The value of the things that you bought from us, we're gonna reduce it on the balance that we owe you. E.g., let's say Temberg bought 500, maybe let's say bought something that is worth 500 from us. I'm claiming that I owe them 117,200. So what am I gonna do? I'm gonna say 17,200. I'm gonna subtract this amount. This is how you account for what a general voucher. And Temberg also has to do the same. On this amount, they have to save 157,400 minus 500. This is how you account for a general voucher, right? Surely the other one will account for it and the other one won't. I don't know why. Maybe they forgot or whatsoever. Another thing that you need to pay attention on is that if you can see the balances here on the 1st of April, they were the same. You see? But what made them not to be the same is these transactions here. Now let's go move into them. And how do you start your thing? You're gonna start by what? You're gonna start by starting with these balances here, right? Now we are simply going to resume with our what? Our creditors reconciliation statement, right? Let me look for paid. Okay, now we are starting, guys, right? So I'm gonna start by saying doing something like this. So I'm gonna say this is the business, and then this is the supply. Are you fine? The business who? Ekasi, and then this is what? Temberg. Are you fine? We claim that we owe them 117,000. How much? 117, 200, 117, 200. And what about these ones? We claim that we owe them how much? 157, 400. 157, 400. Right? Now let's go see what happened. Right? Now I'm gonna come to the transactions here. They are saying that an invoice 289 was incorrectly reflected in the account of Temberg suppliers in the creditors ledger. These goods were purchased from Tami suppliers. Remember, at the beginning of the video, I said that do not mix something that does not relate to your other supplier, right? So invoice 289, which is here, invoice 289 here. We shouldn't have recorded this amount because it does not relate to Tembe. So we must do what? Subtract it, because I need to, if it is increasing, how am I going to cancel it? I'm going to minus it. So I'm going to minus 49,100. So I'm going to minus 49,100. Right? Now we move. They're saying that a credit note 791 was recorded incorrectly on the statement account. This relates to the correct entry for the debit note 702 in the creditors ledger. Remember, me as the business, when I'm bringing back the laptop that I bought, I have to reduce the load, the money that I owe them. But in my books, I'm going to write it as what? Debit note. And then in their books, they're going to write it as credit note. Now let's see. This one is the correct one, right? Now let's go see. Why do I keep on going there? Debit note 702 is the correct one. So we returned something that is of the value of 10,300. So we did correct here. We subtracted it. And let's go see. It's credit note 791, which is 13,100. It isn't on the correct side. First thing that you check, is it on the correct side? How do I know? Because the credit note, it reduces, right? So it's on the minus. So we said it's 10,300 and they subtracted more, which is 13,100. So we have to find the difference, which is 13,100 minus 10,300. What am I gonna get? 13,100 minus 10,300. I'm getting 2,800. How can I cancel this portion on this amount? I'm gonna cancel it by adding. You see? So I'm gonna come here and add 2,800. Right? Now we move to the third one. So we have invoiced 395 on the statement account was for goods ordered by Legacy traders, meaning surely Legacy trader did not account for these goods, meaning it increases the debt, right? They bought on credit. So invoice 395. We have invoice 395, which is 12,500. Do we have invoice 395 here? No, we don't have it. So I'm gonna add it on Legacy 12,500. So I'm gonna say 12,500 this side. Now we move. Then we have what? Tembe supplier also purchased goods on credit from Legacy traders. Legacy trader has transferred the debit balance from the debtors ledger, which is general voucher. What I explained there. Tembe supplier will include this on the next statement. So general voucher, what does it do? It reduces the debt, right? I explained it somewhere here, which is this 500. So we are the one that accounted for the general voucher, which is 6,400. Do I see any general voucher here? They did not account for it, so I'm going to subtract 6,400 on their books. Let's go 6,400. So I'm going to say minus 6,400. We move. Now we are going to go to the number E. Letter E. They're saying transaction on 24 April is for merchandise returned to Tembe supply. We returned, right? Meaning it must reduce the balance. There are two things that you need to check. Is it in the correct column, and is it, let's say, is it in the correct column, and is it the same amount or the correct amount? Now let's go see on the 24 April. Let's see 24 April debit note. I see 9,700. I see credit note 9,700. But what does a credit note do? It reduces the debt, right? So if you pay attention, we record it on the incorrect side. What are we supposed to do? Take it to the correct side. How? I remember explaining something like this. If something is on the incorrect side, what do? You multiply it by 2 and take it to the correct side. Meaning they were adding it, right? So I'm going to multiply it by 2 and subtract it. On which books? Our books. So I'm going to come here and say 9,700 multiplied by 2. So 9,700 times 2, I'm having 19,400. So I'm gonna say 19,400. Then I do what? I minus it. Now we move. Then what do we have? They're saying that the statement account reflects transactions up to 25 April 2021. So anything that comes after 25 April is what? Was not recorded by someone, or this business, the supplier did not record it because they closed it before, right? So if you can see here, you have something that occurred after the 25th of April, which is this one on the 31st. We paid 92,600. Did they account for it? No, because they closed their books earlier. So which is 92,600. We're gonna subtract it on their books. 92,600. So I'm gonna have 92,600. I'm gonna do what? Subtract it. Then there's nothing. There's no transactions. Let's see if this does not balance, guys. Consider me gone. I'm no longer making videos, right? So I'm gonna say 117 200 minus 49 100 plus 12,500 minus 19,400. So I'm having 61,200 157 400 plus 2,800 minus 6,400 minus 92,600. I'm having what? 61,200. So guys, this thing balance, this is how you do your creditors reconciliation statement, guys. Please follow the principles that I just told you now, and please do your work. Please don't forget to like, subscribe and share, right? Guys, if you want me to do a certain video, comment down and tell me which chapter you want me to do or whatever that you're struggling with, so that I can post, right guys? So yeah, thank you guys. Let me leave a question for you guys. When you're studying, just do this one. And if you need solutions, comment down and tell me when you want solutions. You can just simply pause. Let me start from here. You can just simply pause. Yes, do it up until here and test yourself. If you need solutions, just comment down below. I'll release a video. Thank you guys.